All right, we're recording. Good afternoon, everybody. Jim and Stacy Lambright here, the Lambright team, getting ready to do once a month. We like to come out and we like to give you information on mortgages, appraisals, and what's happening in buying and selling in the real estate market, and like to come out and like to bring you the news as you see it on here. We bring it to you free. All we ask is that if you could find it in your heart to do us a favor, if you happen to know anybody who's looking to buy, sell, or invest in real estate in the next 6 months, if you could refer them to us. And really the best way to refer them to us, like if you just give them our name and number, they're not going to call us. If you could just hook us up on Facebook Messenger, on a little messenger, right? Add us and them on the Facebook Messenger, or a quick phone call. Call us and then three-way them in. Give us 90 seconds and we'll take it from there. We would really, really appreciate it. Thank you so much for all your support over the years. So here's the news. What is going on in the real estate market? First of all, we got to figure out how did we finish up in 2017? Well, new home sales are at the highest level in over a decade. That's obvious because there's not a lot of inventory, so new home sales are flying. And you may not know it, but Stacy and I started off in the new build industry. If you know anybody who wants help buying a new home, it costs you nothing to use us as realtors to represent you. We know what stuff to look for, the little gotchas that the new builds have. So you can bring us along on that. We can help you find locations, get a good deal, and help you out. And again, costs you nothing to use us to buy new homes. So in 2017, sales of previously owned homes are at the highest level in more than a decade. And we also found that starts, those are holes going in the ground, of single-family homes are the strongest in a decade, and applications to build such properties advanced to the fastest pace since August of 2017. Can you believe it's been 10 years already since the crash? Unbelievable. So mortgage rate projections. Where are rates going to go? Everybody is projecting that rates are going to go up. They're still amazingly low. Look, anything below 6 is phenomenal. 8 has been the average historically. So we're half of that right now. There's still incredible rates, but they're projecting them to start climbing. Everybody, Freddie Mac, Fannie Mae, Mortgage Brokers Association, NAR, National Association of Realtors, everybody say it's going to climb throughout the year. I agree. That's what all the economic indicators say. So total home sales in millions, 2017, where did we end up and what are the projections for 2018? Everybody says we're going up. People are going to get off the fence because rates are going up. The doom and gloomers over the tax cuts that were given to us. People complain about tax cuts. It just makes me laugh. But it did not happen. They renegotiated in the House and the Senate, and they came out with a bill that was great for Americans everywhere, except for a few of you really rich people. You guys got the shaft. So, but they're projecting everybody, Fannie Mae, Freddie Mac, National Association of Mortgage Brokers Association, Mortgage Bankers Association says sales are going to go up. It's going to be a great year in 2018. Buyer traffic in 2017 is better now than last year's spring market. Yeah, that's crazy. I know. Stacey and I sold 3 condos. We put them on the market like 2 days before Christmas and sold them before the end of the year and are closing them right now in January. We have 2 of them closed this week. So it is a great time to sell. I know winter is not traditionally the time you think about selling, but look, inventory sold. Do you know there's 9,000 agents right now in Columbus and 3,300 homes available for sale? We listed a house the other day in Blacklick, an affordable house, 175. It got 7 offers. It went above list. Everybody bid each other up, and it was a nice little house, but it was just a house, you know. But demand is high right now. I'm telling you, the early bird gets the worm. List now, and you can really maximize your maximize the money you're going to make. And some of you are thinking, well, shoot, if inventory is so low and I sell my house, how am I going to find something to buy? Look, we've helped people negotiate leasing the home back. So selling it, closing with the new buyer, and leasing it back until they're able to find another house. We've negotiated that. We found people temporary housing where basically you take your toothbrush, your suitcase, you move in, it's fully furnished, all your stuff goes to storage till you find the house you want. All kinds of stuff. We've been doing this for 20 years, 20 plus years. We can help you. You'll be fine. Okay, but traffic is up. It was crazy. I had 20 flyers that day and gave 1 out per family, and I was out within 90 minutes. I did not have enough flyers for the open house we did. America's housing market is gearing up for another robust year, according to Bloomberg. Builders are more optimistic, demand is strong, and lean inventory is keeping prices elevated. That's up. And what's more, the tax legislation signed by President Trump may not pose as big a risk to demand from home buyers as earlier versions did. That's Bloomberg. Look, we're in good shape with the tax bill. Unless you're over, and I did a whole other video on that you can link to, but unless your house is over $750,000, you're good to go, okay? So check out my video on the new tax code and its impact on residential real estate. I'll put a link on it down here below. You can check it out. It's a completely different video that talks all about that. You can check it out, see how you were affected, or if you were affected. You probably weren't. How will the tax bill likely influence your home sale this year? This is a survey that was taken, right? 57% said it would have no impact. 13.9% said they will sell faster. 7% said they will sell slower. 7.6% said I will postpone my home sale, and 11.4% said they didn't understand it and they chose other. All right, the survey, other. What likely impact will the tax bill have on your plans to buy a home this year? Some people say they're going to buy faster. Look, almost 30% say they're going to buy faster. What's that mean? It means it's January. Usually no one's thinking about buying a house right now. Look, folks, people right now have checkbooks in hand. I had 2 buyer's agents that had pre-printed contracts with them the other day when we listed that house, and it went on the market at 1 o'clock in the afternoon, and they showed up with contracts in hand to show the house for the first time, okay? So that's what we're looking at. The likely tax bill is going to have other plans. Some people saying it's going to have no impact. Others will say it'll buy slower. Some will say they will purchase a less expensive home. But it all looks like good news. Here's something. How important a part of the American dream is owning a home? 18% of people say it's the most important. 53% say it's very important. And 22% say somewhat important. If you do that, that's 93% of people in America view owning a home as being an important part of the American dream. That's a big, big number. Why am I saying that? Because we need your home to sell. Buyers are looking to buy, and it is a great time for you to move up, okay? 81% agree that owning a home increases a person's financial stability, and 61% would feel less successful if they never owned a home. I hear some people sometimes saying, you know, it doesn't make sense for me to buy. I'm too nervous. I'm going to rent. But that is completely backwards thinking. If you rent, you know, if you miss your rent in one month, you miss your rent, they can have you out in 22 days, out on your street, out on your butt, out on the street. Do you know how long it takes to get someone out of their house if you stop making your payments? If, God forbid, something bad happened to you, you drag it out for years. So there's definitely more stability in owning a home than renting. Renting has no stability, none. Anyways, buyer traffic in 2017 is better now in the past spring market. Here we go. 2017 was better than 2016, and we're projecting 2018 to be even better than that. Here's what Dr. Frank Nauthut said. It's from CoreLogic, right? He's chief economist, really smart guy. Single-family residential sales and prices continued to heat up. On a year-over-year basis, home prices grew in excess of 6% for 4 consecutive months. That's the longest such streak we've had since June of 2014. Do you know how crazy that is? That is big. This escalation in home prices reflects both the acute lack of supply and the strengthening economy. The economy is getting better. People are making tons of money in the stock market. Their 401ks are back. All the wealth they lost from the crash is back if they stayed in and didn't have to sell. Lawrence Yun, who is the NAR, let me get rid of this thing here, is the National Association of Realtors chief economist, said the healthy labor market and higher wage gains are expected to further strengthen buyer demand from young adults next year. Their prospects for becoming homeowners will only improve if more lower-priced and smaller-sized homes come onto the market. So we're looking for affordable housing for people that are willing to pay big money for it, and that allows you to move up, pull your equity, put it down on a more expensive house, and keep your payment the same. You buy a more expensive house and have a similar payment to what you have now by taking the equity and rolling it. We'll show you how to do it ahead of time. Just get with us, and we can show you the math on it. Okay, so available months housing inventory is going down, 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 down. If you take a look at this thing, 3.4 months. It's less than that here in Columbus. This is just like a national average. Again, a lot of these numbers are national numbers. Locally, Columbus, it's less than that. Okay, inventory levels heading into 2017. Last year, we're climbing, right? And we saw a little bit of that, and you know, we'll see what happens with that. But we really need some houses for 2018. Just 9,000 agents, only 3,300 homes available for sale. Just gives you an idea. And all of us have multiple buyers. So it's crazy right now. New homes sold in thousands. You can check that out. From 2011, from 306,000 to 2017, 733,000. The new build market is going to be strong. And what we're finding is new builders are shifting their focus from the luxury market back into affordable housing. We're going to see more and more of those. We have some great builder reps that we work with that we completely trust. Get with us, and we'll talk to you about what part of town you want to live in. We'll find you a new home and take you through the process. It sounds very scary, but Stacy and I did new builds for years and years and years. And it is actually a fun process to pick your own stuff, your own carpet, your own cabinetry, your own paint, your own tile and things in the bathrooms and stuff, your own appliances. It's really cool. And it's not as hard as you think. They have these amazing design centers. We'll walk you through it. Use us. It doesn't cost you anything. We'll help you out. Okay. So what's happening with year-over-year percentage change in price? Well, if you take a look at this thing, Ohio went up 5.6% in price going up. Now, some of you might be thinking, well, maybe it's a bad time to buy because it's going up. No, wait until you see these other charts. We're going to continue to go up for the next 5 years. You got to get in now or you're going to miss the whoosh of it going up, okay? The average, the United States average was 7%. Ohio, 5.6 for the entire state. Cincinnati, Cleveland kept us down a little bit, but we're booming here in Central Ohio. So the forecasted year-over-year percentage change in price is 4.2 for the United States. Ohio's right there in the middle of that, 4.1. Those are great numbers, by the way. Those are incredible, incredible numbers. If you went up 4% on a $200,000 house, you made $8,000, $8,000 that you got put in your pocket. There's like a rebate, basically, when you sell it, coming back for the payments you made. Makes tons of sense to buy right now. House price appreciation in the U.S., the annual percentage change. So take a look from 2000 to 2018. Then we had the dip, the crash that we had there in 07, 08. There were some real indicators that that was coming, though. In 2006, a lot of us missed the fact that price appreciation only went up 1%. There's Stacy. Hey, I'm making a video here for everybody. Say hi to him since you're not here on it. It's video going.
Hello?
Hello, there she is. All right, so I got to go finish making this thing. I don't want to bore people. All right, bye. So house price appreciation in the U.S., it went down over those years. And what I want you to know is we are not in a bubble, and I'm going to show you some proof of that here in a second. You don't have to worry about that. That word bubble scares people. There were indicators out there that this was coming in 06, 07, and 08, and a lot of people just ignored it. We don't have those indicators right now, and I'll show you why here in a second. So take a look, 02, 03, 04, and 05. Look at the double-digit house price appreciation in the U.S. Double digits. That's a scary number. But 5%, 6%, 6.4, 6.3 like we have right now, all this stuff you see over here, totally good, not going to be a problem. We are right in a good number, a healthy climbing number, strong appreciation, but it's not the double-digit stuff we were seeing back then leading up to the crash, okay? So there it is right here again, with almost 11% between 2002 to 2005. The last 4 years been hovering around 6%. So we're almost half of that. So we're in great shape, nice appreciation, steady, nothing crazy climbing and going nuts. So here's a definition of a bubble, because I hear this bubble talk all the time. A bubble, this is from Bill McBride of Calculated Risk. He's a very, very smart guy. But a bubble requires both overvaluation based on fundamentals and speculation. That's the key. It is natural to focus on an asset's fundamental value, the value of the home, living there, right? But the real key for detecting a bubble is speculation. See, speculation tends to chase appreciating assets, and then speculation begets more speculation until finally, for some reason, that will become obvious to all in hindsight, the bubble bursts. So we had people back then that were buying houses and not even living in them. Like somebody from Minnesota would go and buy 3 houses in Vegas and let them sit vacant and then flip them 18 months later and not even make any repairs to them. That is when the bubble happened. We don't have that now. People are buying them and living in them. We're good to go. So 2005, speculation was 23% of investor purchase homes. We're at 13% now. We're half of where we were back then. was a healthy number, and the people buying now are actually repairing the homes and flipping them. They're putting in new countertops, cabinetry, kitchens, bathrooms, everything like that. So there's an actual value to the investor buying the home and flipping the homes. And by the way, we can help people get set up for working with that too. We get short sales sometimes that are great values. If you're interested in flipping homes, get a hold of us. Okay. That was a commercial, if you're wondering. In 2005, people were just buying homes, letting them sit vacant. This is exactly what I was saying. And then selling them without significant improvements. Classic speculation. And even more dangerous during the bubble was the excessive use of leverage. All those poor quality loans. People were buying them with zeroed out. People didn't have any money in them. No skin in the game. Currently, lending standards are decent and loan quality is excellent. So prices may be a little overvalued, but there is little speculation, and I wouldn't call house prices a bubble. And I don't expect house prices to decline nationally like during the bust. Bill McBride, Calculated Risk on 2017's. Frank Martell, President and CEO of CoreLogic, again, really smart guy. The acceleration in home prices is good news for both homeowners and the economy because it leads to higher home equity balances to support consumer spending as a cushion against mortgage risk. So what's that mean? If you have equity in your home, you feel better, you feel more confident about going out, about spending, about making the economy move, right? And it's a good thing because higher home equity balances support people continue to pay on their homes. Look, when you were upside down in your house, people were just dumping them. They're like, I don't have any value in it anyways. Why am I going to make the payment? What are you going to do? Screw up a number on the computer, my credit score, and people were just dumping them. That doesn't happen when there's value in the homes. And so that's a good thing going on. Listen to this. Homeowner equity increased by almost $871 billion over the last 12 months. Over the last 12 months, going on $1 trillion. That's the largest increase in more than 3 years. This increase is primarily a reflection of rising home prices, which drives up home values, leading to an increase in home equity positions and supporting consumer spending. Dr. Frank Natha, Chief Economist for CoreLogic. Okay? Equity share, when you're looking at that for Ohio right there, 93.1%. So first of all, I want you to know this stat. 30% of all the homes in the United States have no mortgage on them. 30%. Almost 1 out of 3 have no mortgage. And the ones that do have a mortgage, over 93% in the state of Ohio are in an equity position. That's really good. Really good. Okay? It wasn't like that back in the day. And significant equity, meaning they have more than 20%. Again, 30% of the homes, no mortgage, but the ones that do have mortgage, over 78% of them have greater than 20% equity. That can weather quite a dip. I mean, you take a 10, 15% dip, people still have equity in the house. If that were to happen, it's not coming. It's not coming for a while, okay? Average equity gained year over year. If you look in Ohio, the average equity for the average person in Ohio was $9,000. $9,000. That's $750 a month. Think about that. If your mortgage payment was $1,500 and you were getting when you sell a $750 a month credit, basically the $9,000 divided by 12, it costs you $750 to live in that house, and we ain't even talking about the tax savings that you're going to get. People tell me it doesn't make sense to buy a home. They're nuts right now. They're nuts. It makes absolute sense. Renting is pissing your money away. I can prove it to you, math. Get with us, and I will show it to you, okay? Cellular tenure in homes has increased. People are staying longer in their houses now. Everybody got scared. You can see it right there on the graph. It was about 6 years was about the average, and then 08 when the crash came, people went 7, 8, 9, 10. People are staying 10 years now, and that's okay. When they stay longer, they end up gaining more equity in the home. In fact, you look at this graph, people that stay in their home 11 to 15 years over a period of time gained 18%. People stayed 16 to 20 years gained 56%. And people stayed longer than 20 years in their home had over more than 104% median equity earned by staying in the home for 21 years or more. That's amazing, okay? Bill Banfield says, encouraging to see opinions from homeowners and appraisers more aligned on a national level. So we're going to see here in a second is a graph that talks about a thing called the appraisal review we were seeing a lot of last couple of years. Appraisals are one of the most important data points when applying for a mortgage. The more homeowners and appraisers agree, the smoother the process is. So what does that mean? Well, we used to get a buyer and seller to agree on the price, and then the appraisal would cut the value they'd be willing to loan. And that was no good. That keeps values from going up, right? So here's what we're looking at right now. In the last 12 months, man, back last June, we were almost 2% off from what buyers were willing to pay and what appraisers were willing to appraise for. We're down now to 0.6%, 0.67%. That's a good thing. The closer those two numbers are together, the better they are. So appraisers are coming around. Banks are loosening the strings. They understand that this is not a bubble. This is a wave of property appreciation. And yes, what buyers and sell, an object is worth whatever a buyer is willing to buy it for and a seller is willing to sell it for. That's what it's worth. That's a pretty simple process, okay? All right. Home price expectation survey. It's a nationwide panel of over 100 economists. These are the smartest people on the planet, real estate experts, and investment and market strategists. So what they've projected is that we're going to see appreciations continue to go. 2018 at 4.2, but they're projected that the appreciation levels are going to get back to a more conservative level of around 3.5%. And that's fine. That's fine. We don't need double digit. You know, people say, oh, we should go back to 10, 11, 12%. No, you don't. No, you don't. That's the danger zone. Historically, that's the danger zone. 3% is nice, steady, beautiful appreciation with your tax write-off. It literally, you can live in the home for half of what it costs you to live in rent. So super great. Cumulative house appreciation. So there's two types of people when it comes to making projections. There's the glass half full people. We call them bulls. There's the glass half empty people. You know, when you have a glass half, right? They say the glass is half empty. They're the negative people. They're bears. Everybody agrees that cumulative house appreciation over the next 5 years is going to go up by double digits over the next 5 years. The bears are a little more skeptical. They say 10% total over the next 5 years. The bulls say as high as 34%, going up a third in value. You know, if you take all projections, everybody combined, it's around 23%. Okay, so a great time to buy. It's going to go up in value. What's that mean? On a home here, check out this graph. On a $250,000 home projected using the average here over the next 5 years till January of 2023, so 5 years out from now, it would be $294,000. $294,000, you paid $250 for it. It's making $44,905. That is beautiful. That's something you got to jump on that wave and catch on to it. Okay. Now take a look at rent. This is something I show renters. I don't know if you can see this or not, but let's see if I can move my thing. Can you see that? Look at the spike in rent. Rent is going up since 1988. It's going up at almost a 45-degree angle. Rents will continue to climb. When you get a house with a fixed rate mortgage, your payment stays the same, even while mortgage rates are, even while rental rates are going up. When you have the house, you can sit there and just have a nice steady payment, and your income hopefully will climb. Maybe you start a business on the side and you start improving your quality of life because you have your payment locked in. But with rent, they can just keep going up because rental demand will continue to, because they keep making more people. All right. After about a 2-year slowdown, rent growth is starting to pick back up across the nation. Looking at 2018, rents expected to continue gaining. More widespread rent growth could mean home buying demand stay high as renters who can afford it move away from the unpredictability of rising rents toward the relative stability of a monthly mortgage payment. That's what I was talking about. That's from the guy from Zillow. They're senior economists there. What's that mean? A fixed rate mortgage with a fixed payment is way better than a rent that can go up at any time and is completely unstable. All right, so let's just go through the news updates and we'll wrap up with this. I do the news updates run every single month so you can keep up with the trends. All right, so here's what we're looking at. Sales, average days on market. It's showing right here for Ohio, sitting at the 40 to 60 days across the nation. It's 40 days. Look, it's way less than that as far as average days on the market. They're selling faster, affordable houses. The upper end's slowing, but anything under 350 flying off the shelves. All right. You can see existing home sales since January of 2012, up, 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 up. Of course, there's ups and downs, but the trend is up. Same thing with existing home sales since January of 2014. You can see it there a little closer snapshot of it. Again, up, 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 up. Existing home sales year over year by region. The Midwest up 6.8%. Now, you're probably wondering, what the hell happened to the Northeast? Their inventory is so low that they can't increase they can't get enough houses there. And there's not a lot of room to build. All right. Existing home sales, again, in the thousands. We're seeing 2017 bigger than 2016. And our same thing for new home sales, 2017 bigger than 2016. And then you'll see the new home sales are up. And again, new home sales are moving more into the affordability range, and we're going to see that be helpful. So here's what you're seeing happen right now. A lot of new builders are moving into that 200 to 3 to 400 type range. So more affordable type housing. They're in the FHA price range. You're going to see nearly 58% of the builders moving back into that price range and helping people buy homes. I mean, first-time home buyers now are buying in the 200, 225. With their incomes that they're making, it's totally doable. And we show you how it works. Plus, some of these builders give even better rates than what's going out there. They get some real cool stuff. And you can get in with very little money down. That's another video we'll talk about another day. But I mean, you could get in for just a couple $1,000s out of pocket. It's crazy. New homes are selling fast, man. They are selling fast, fast, fast. Some of them are done. Like spec homes, we can help you find those. But most of them we're going to pick from the ground floor up and have them build it for you. So if you're renting or know somebody who's renting, it does take a few months, 5-6 months to get the process done. So if their lease is up in August, they need to start looking today. There you go. All right, that's my commercial again. With us. Total home sales, again, we're seeing everything up. 2017 is well over 2016. That's not any news we haven't known. Again, pending home sales, homes that are in contract, we're seeing those stay up higher than 2014, 2015, 2016. 100 on this chart right here, 100 is a historically healthy level. If you take a look at it, everything is above that and projected to stay above that for 2018. We're definitely looking at pending home sales to stay up too. Pending home sales, the Midwest up 0.8%. The West took a dive. Again, the reason being from year over year is, again, lack of inventory. It's not because homes aren't, people want them. Distressed property sales on the way down. Why is that important? The less distressed property sales you have, the better values stay. Stacy and I, by the way, still do short sales. We don't love them, but I would say we're probably one of the most qualified in the city to do them. We've done amazing things for people. So look, bad things happen to good people. If you know somebody that's going through a divorce, they lost their job, God forbid it's a health issue or something like that, and they just can't afford the house anymore, don't let them start missing a payment without talking to us. We can help them do what's called a short sale on the house, get the debt forgiven, help them get away without having to come with a bunch of money out of pocket, and the bank pays us to do it. So they don't even have to pay us. Pretty cool deal for a bad situation, and there's very few of them out there right now, but if you know somebody who's just in a bad spot, don't let them get their credit wrecked and go have a foreclosure and file bankruptcy. We can help them, okay? Home prices. All right, home prices. What's going to happen? Existing home prices going up. Look at the Midwest, 8.8% year over year, going up. Lots of equity going in. Again, we're seeing percent change in sales. Sales are down that 0 to 100,000 range. There's just not as many of them out there, but everything going up. We're seeing more and more properties selling, and that 250 to 500 range, 500 to 750 are really hot. We're seeing those start to take off. And a lot of people are trying to beat, in the upper end, they're trying to beat the tax code change that I talked about in another video. Year over year price changes, check that out. There's the Case-Shiller index. Everything is up. We're looking good. No red on there whatsoever. Same thing with the 20-city composite. It's pretty cool because they take 20 cities and combine them together. Again, we're in great shape on the Case-Shiller index. And if you take a look here, next one, forecasted year-over-year percent change in price, 4.1%, expected to go up again. More equity coming, nice, steady, stable, nothing nuts. Well, on the West Coast, you might see some nut stuff. I mean, they're looking at 8% over there in the Sunshine States. But Midwest right here, nice, slow and steady, right? Slow and steady in 3 yards in a cloud of dust, right? Us farmers here in the Midwest. Appraiser home value opinions compared to homeowner estimates. We talked about this already. They're getting closer and closer. Appraisers are getting better at recognizing, and banks are becoming more lenient on the fact that this is an inclining market. It is not a bubble. They're appraising the homes for very close to what they're selling for. Only 0.67% difference. That's not much, okay? Housing inventory. Look, we need houses. The seller traffic, this graph right here shows Ohio seller graphic. It shows all of Ohio. Look, I can tell you, I told you already, my open house this past Sunday, 20 sheets, We gave one out to each family, and I say family because they came in groups of 5, 6, and 7, right, to see these houses. They brought moms, dads, aunts, uncles, everybody coming to look. And I was out in 90 minutes. I had handed out 20 different people. I couldn't even get them all down on the sign-in sheet. There was just people everywhere, 7 offers. Foot traffic is up, and it's January, and it was a nasty day too. All right. Inventory, amount of inventory that's available, it's very low. We need your house. We have a buyer for your house. We can sell it very quickly. You're not going to sit on the market a bunch of time, take a bunch of showings, like one weekend, and it's done. And then we can negotiate for you to stay in the house until you find something you want to buy. All right. So get a hold of us on that. Homes for sale, available homes for sale. Look how low it is. Oh my gosh, months inventory. You know what a healthy market is for months inventory? 6 months. Look at this thing. We're sitting a little over 3. Not good. We need more houses. So we need yours. And if you're wondering, I wonder if he's talking to me. Yes, I'm talking to you. All right. In the last 12 months, again, take a look at the inventory. It's hovered around 4. It's now down to 3. And we're coming into spring, which isn't good. So we need a bunch of houses. Year over year inventory levels, other than the crash time there where you see the blue where inventory levels are up, we have just seen low levels of inventory. And that means is a great time to sell. The housing supply year over year, we're down 0.97%, almost 10% over the last 12 months of what we needed to be. So inventory levels are going down, demand's going up. You can figure it out. Prices will go up. There we go. And the new home inventory right now, we don't have December's numbers yet, but take a look. What you'll see is that right around 6 months supply in new home inventory here in Central Ohio. It's not like that. That's got to be a national number. Boy, it's less than that. So we're going to probably buy from scratch or build from scratch. Super easy to do. Put the house in contract. We'll take you through the process. You'll be happy with it. Okay. But look at that. Woo, new home inventory dropped nationally down to 4.6. That's a big drop down. In Columbus, we're even less than that. Buyer demand is up. Buyer traffic's up. Foot traffic's up. Foot traffic in the last 12 months has been up. Everything is showing. Every economic indicator shows for another great year, even better than 2017. Interest rates are crazy low. 4% is just nuts. It's basically free money you can jump in on. By the time I show you, and with your tax advisor, I'm not a tax advisor, but show you how you get to write off your mortgage interest and you can write off your real estate taxes off your taxes. It's an amazing way to go and to buy a home with the interest rate. So we're going to look at interest rates probably climb to 4.5. So keep your eye on that. Everybody's projecting them to go up. This is Freddie Mac talking about the 30-year fixed rate, projecting it to climb. So get in now. Mortgage credit availability, yes, no, maybe. Are they going to give me a loan? Well, what we're seeing is mortgage credit availability index is showing that they are being very open to making loans, to doing manual underwriting instead of just having the computer decline or approve you. Actually build a case if something happened in the past for you, and you can show a worthy cause as to why your credit took a dip, what happened, was it a divorce or a medical thing or something like that. But they'll actually manually underwrite your loan right now and take a look. You can talk to a live human, and we can put together a case for you as to what happened and where your path is going now, and you can get a loan. Right? And that's what we're seeing right now. Just so you take a look at this. Are we in a crash? Are they being too flexible right now? No. I mean, look at this. Back in June of 2006, almost 900 is where we were at right now, and we're under 200. So you can see that graph. That's why the crash happened right there, that big, huge spike in available mortgage credit. They were making crazy loans back then. We're not doing that now, okay? So it's easier than you think, but it's not like it was back in the day. Average days to close the loan are 45. Look, depends on the bank you go with. We have great lenders that are doing it in under 30 days that underwrite their loans on site. Be careful the bank you choose. They can screw up your loan. In fact, some banks, listing agents are not accepting offers on certain banks' pre-approvals. So keep in mind on that. If you don't know who that is, you can come talk to us about it. We're not going to say their names on here because I don't want to get sued. FICO score requirements, 722 is the average for the last 12 months. Look, you do not have to have a 722 to buy. Take a look at this. Over 53% of all the loans made were were in that 600 to 750 range. Nearly 10% of the loans were 600 to 650 credit score. There were some people that got it in between 550 and 600. Not a big percentage, but there were some extenuating circumstances. So don't think you can't buy just because your score is low. And also, we have credit repair people that will work and will fix the errors on your credit. The numbers that are out there for errors that are on your credit report are huge, huge amount of errors on there. And we can get you with the right people to get them off there. You'll be like, what? I don't know who this is. You'll have like Bill Smith's collections on your credit report because your name's Bill Smith. And the people go out there and file liens, just file them on anybody with the same name as you. And we can get them all removed, and also your score jumps 100 points. All right? So get with us on that. Average FICO score, again, FHA 681. We're doing them all the way down to 590 and stuff like that. So average back-end DTI, debt to income, FHA doing 43%. That means fully 43%. That's the average. We've seen it go as high as 49% of your income can go towards bills, housing expense, car expense, credit card expense, student loan expense, all of that. You don't need to learn all this stuff. We know it all. Get with us and we'll help you do that. And then here's my links if you want to question any of my data. Somebody was trolling me on YouTube the other day, questioning my stuff. There it is there, and I can send you a copy of it since you can't click on the link off the video. So like I said, I did a video about the new tax code and its impact on residential real estate. I'll put the link on it down here so you can check that out. It's a completely different video. It would have made this one too long. I want to thank everybody for jumping on again. If you appreciate this data and you like it, the biggest thank you could give us is introducing us to somebody you know who's looking to buy, sell, or invest in real estate in the next 6 months. And the stat is National Association of Realtors says you know at least 5. So if you can do me a favor, keep your ears open at school, your kid's school, at your work, at your church, around the neighborhood, and you know somebody is looking to buy, sell, or invest in real estate. Stacy and I have some incredible programs. We have a Love Your Home program for buyers. We have a guarantee on our investors where we put our commission where our mouth is, our money where our mouth is on that. And we have a guaranteed home sale program. And currently right now we are running a 4% full service listing program that only works when agent count is high and inventory is low. It's the only time that works. When it goes back to traditional stuff, it'll have to go back to 6% listing rates. But right now, if I can sell your house in an hour, we're not going to ask you for 6%. I mean, you know, but when the old days come back and it's taken 6 months to sell it, and we're marketing it and we're carrying it and all of that, we'll have to go back to the old 6%. Right now we're doing 4%. Full service, by the way. That's not some, there's a lot of people that are trying to copy us on that, but they're doing like no services for you. They're basically sticking a sign in the yard. That's not us. Full service. And what we're hoping is that you will refer us to your family and friends, and we'll do more volume. We had a great, great year last year running that. Pissed off a lot of agents, but you know, it's just the market the way it is right now. I think if they're charging 6%, I think they're taking, my personal feeling is they're taking advantage of you, selling your house in, you know, in a weekend and charging you 6% on that. I just don't see it. So anyways, thanks a lot. And we'll see you guys soon. I'm going to stop this video. See ya.